Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. This is our morning pre-market session where we set up our trade plan for the day. It's Wednesday, November 11th, Remembrance Day. I want to thank all the soldiers that risked their life for our freedom. My name is Doug McKay. I am the founder of Quantum Leap. This is a subscription room. We do these live pre-market sessions where we look at the market from a macro to a micro, drill down, choose our trade levels and our targets for the day and our main hypotheses. If you want to come in for a free trial, I'll put up my contact information just after we get the disclaimer out of the way. This information is for those that looking to expand their knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. To get a hold of me, send me an email to quantumleapfutures@gmail.com or send me a Skype contact request, Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you want to see more of these videos, there's close to 280 of them. Just do a search on YouTube, Quantum Leap Futures, and if you want to follow me on Twitter, @Crazy2. Okay, so let's take a look at the news. Of course, it's a banking holiday today. Draghi was speaking. I don't know if he's still speaking, but really there's no other real news today, so we don't have to worry about scheduled news today. Yesterday, we were looking for a rotational day, and boy, did we ever get one. Basically, inside balance day, just chopped around all day. It was a real tough day. I can't believe I pulled out a day of it, but we finally did go up and break the IB to the high side, and I was able to at least make a decent day of it. But very, very balanced day yesterday. I always like to start with a basic routine of looking at the macro and the micro. I use a candlestick chart, a 9 EMA and a 20 SMA. I'm looking for slope and separation and where the trend is being challenged or violated. You can see that the monthly was very strong over the course of the last 2 years. Then the last 2 months we closed below, and then October we took it back, and we're back above the 9 and the 20, and we have continuation of the trend on the monthly. On the weekly, we had the downtrend. Price rallied, got above the 9 and the 20, and now we're moving back up and starting an upward trend again on the weekly. On the daily, we've had this strong trend, great slope and separation. We had a little technical gap here with the Mr. Sneaky. We rolled over the last couple days, closed below the 9, tested the 20, and now we're back above the 9 and the 20 with the possibility of continuation up on the daily. Going to the intraday, we've had this downward trend in the last few days, and yesterday and overnight we've taken it back. We've violated the downward trend. We're closing above, we're trading above the 9 and the 20 right now, so we're violating this downward trend. On the 1 hour, we've rolled over, and we got slope and separation to the upside. We have a strong trend going to the upside on the 1 hour. We do have a naked cross up here on the 1 hour. This is going to be a key level for us today at 2091 area. And we've got a naked cross at 2091. On the 1 hour, we have a 2094. 94 and a quarter on the 30-minute. Again, on the 30-minute, strong trend. We're losing a little bit of slope here, we do have separation. They are testing the trend here at 2080, 350. If we violate that, the next test is going to be down into the 2080, 150. I'm really looking at that 2080, 50, and we'll take a look at that on the profile in just a minute. On the 15-minute, we've had this trend, created a technical gap, closed the technical gap, testing the 20 SMA right now. If we violate it, there's a naked cross down here at 79.50. I'm actually looking at the 78.50. Again, we'll take a look at it in a minute on the composite profile. And then you can see we've rolled over. We've had this strong trend up on the 5-minute, and we've rolled over, and now we're starting to trend down on the 5-minute. A test of the 9 from below will take us back up into the 84.25. That's going to be a very key level for us today. So let's take a look at the big picture. The 10-day microcomposite VPOC is at that 2080.75. That's why I'm watching that level. Of course, right now we're trading in around the 2084.25. The 2084.25 is the most traded price going all the way back to 2013, January 1st, 2013. It is also the microcomposite VPOC from the balance area that we've been watching that runs from February 5th through to August the 9th. Key levels above us right now is the 87.50 area, the 90.75, the 93 to 94, and 97.50. 97.50 is going to be our key line in the sand. It's where we tried to hold value inside the smaller profile up here, and we fell out of that, came back down, came down to this 2065 area, rallied back up, accepted value at 73.75, and come back into the longer term balance up here in 84. Levels below to pay attention to, obviously the 80.75, 78.50. This was the composite VPOC before it shifted up on last Friday up to the 84.25. So it could shift back down. And then of course below there, the key line in the sand is now going to be the 2074.50 again. And below that, if we don't hold that, look for a move down into 70, 66.50, 64.75, and then the 60.75. The week high is 97.75. The week low is 20.62. We're going to talk about the average true range there in just a minute. Okay, so let's take a look at our overnight. So our overnight high is at 87.75. Just below that range high at 88. I believe that was on Monday. And then the range low is 75. Basically right at our value area high from yesterday. And then the overnight VPOC is shifted up to 85. And very blunt profile, but there is this this LVN right here at 80.50. I'm going to use it as it's LVN from overnight, but it's also that little microcomposite VPOC as well. Or not little, it's the 10-day most traded price down here. So, you know, we're going to be opening up outside of range and outside of value. Well, it looks like we still have 30 minutes to go. We could come down within the 30 minutes and come and test this range high from 79. But right now, we're trading inside of that balance. the longer term balance at the composite. This is a very important level. We're likely to bounce off of this level. I'm actually going to use this level as a trade area. I don't usually use HVNs or high volume nodes, but because this is the composite VPOC, I am going to use this as a trade level. A little bit different than I normally do. Normally I'm looking to trade low volume areas and move towards these, but because we're opening here, I want to see if they hold. If we continue to see initiative buyers stepping in here, I'm looking for the move up in to take out the overnight high and a test of this 90.75 area. Our week open is 2092. Above the 90.75, look for them to challenge the week open and move up into this 93 to 94 area. Again, this is the little HVN here at 94.75. It's also the 10-day value area high at 93.75 with the naked VPOC and a naked close here. So this is a key level above us. And then up here, the next key area is going to be this 97.50. It is also our daily ATR upside target. The overnight low is down here at 75. Our daily ATR is running at 22.70. That makes that our upside daily ATR target at 97.75. It is also, okay, our week high and our value area high from the longer term value. So this 97.50 is going to be not only a high of the week, a very important level. It's our key line in the sand as well, because out above there, then we're back into price discovery, and I'd be looking for a move into the 2100s. Nothing changes in terms of the upside targets. Above the 2099.75, you can use the 2100 if you like. Target 175 and 350. And then 550 and above 550, I'd be looking for a move up into the 13. The fractal high right now is our 2110.75 that we failed off of when we got up and had that rule of 10, and I'm not likely to hold this time, so I'm moving this up to 1350. And then our key line in the sand above there is going to be the all-time adjusted RTH high at 2117, and then our targets above are 21, 24, 26 and a quarter. Our weekly ATR is 67.31. Our week low is 20.62. So we do have room within this week still to come up and test this 21, 29 and a quarter, still within range, our 20 period weekly range. And then, of course, above there, we have the 21.34 all-time high. Now, I don't know how many of you follow crab patterns. I'm not going to draw it out right now, but there is a crab pattern, long-term crab pattern that gives two key targets above 21.30 for the year end, and a extended target up to 23.25. I thought that was interesting. And the key levels of support for that are 20.50. And I find that's interesting because that's our key line in the sand below at 20.49.75. And the other one, support 2, is down at 20.30. Okay, and 2030 is our weekly ATR downside target at 20.30.50. This is interesting because we're all looking for that retrace. If we come down and hold either of these two levels, we've got a measured move back up into 21.30 and 23.50. as a longer term. I don't think we'll see 2350 in this year, but as a longer term target. And I'll post a picture of that crab pattern a little bit later on. Okay, so if we break below 84.25, I'm looking for a move down. The first target is 82.50. And then below there, the 80.50. Now I'm going to move the 80.50 so it encompasses 80.50 and the range high at 79. So I really want to be below 79 to get short, but I want to be above the 20.80.50 to get long. And then obviously the target to the low side is the gap close at what was the close? 77.75, and then a move down to test the overnight low at 75.25. Just below that, we have the 74.50, which is going to be an important level for us. So it's going to be a trade level. Don't need. Let's get this off. And then if we break the 74.50, then a move down to target the VWAP and the midpoint. But I'd be looking for continuation down into the 20.70.75. I'll be looking for responsive buyers to step in down here to rotate us back up through. And of course, the overnight low is sitting right on that value area high. So we really have to encompass the 75 down through to that 74.50. So same thing as the 80.50 level. We want to be above the 75 for longs. We want to be below the 74.50 for the shorts. And then if we get back inside of value and hold there, look for an 80% destination trade down into yesterday's open and our value area low down here at the 67.50. Below there, it's our ATR target, downside target for the daily is down at the 64.50. The 64.75, remember, is a microcomposite VPOC. It's also a key level for us. So I will be using that as a trade level again. It's going to get a little bit busy down here. But then below 64, I'd be looking for 62 is not going to be a level today. I'll be looking for the 60.75 level, the CLVN down here. And then below that, the 57.50 and the year open at 20.55. And then our key line in the sand, the value area low for this longer term micro composite is the 51.25, but I'm going to move my key line in the sand down to 49.75 so that we're below that key CLVN, but I will be using 51.25 as a target. I'll scale out of there. And then anything below the 49.75, I think we get the bigger retrace down into the 45.44 area, 41.50, the 50% of the significant breakout candle that we have not retested yet is at 37.75. And then, of course, we've got that 31.25 and our weekly ATR target. There's also a naked cross down here at 2030 as well. So, a very key level is now shaping up on this 2030. We've got the support 2, on the crab pattern, and we've got the weekly ATR. We've got the naked cross. Whole bunch of levels down here. And then if we get below there, we've got 27.75, 23.50, 20.75, and 17.50. I don't think we're going to be there today. Right now, I think we're going to probably get some continuation. Probably could come down and test down into the the 20.70.75. It's a holiday. It is Remembrance Day, so look for initiative buyers to step in here, and we could come up into these upward targets, into the 93 and 97. I don't expect the trend day today. I'm looking for a rotation day with a little bit of upside bias, but we could come down into the range to find responsive buyers before we rotate up. But because we're opening up outside of range, outside of value, we have to look for initiative buyers to step in. That is a possibility. If we get an open drive, don't try to fade this open drive. Okay, they're likely to push it all the way up here into the 93 area. So you don't want to try to fade any type of open drive today. If we get two-sided action and we can't get back above the 84 and a quarter, look for them to come down and at least test this 80.50 to 79 level. And if they get inside of the range, look for them to push down to close the gap, test the value area high, and probably come down into the 70. This is where I would expect responsive buyers to step in and rotate us back up. Now, we could come in very easily. Yesterday we said that we had the possibility that we were going to get stuck in the wick. Well, most of the day we traded inside of this wick. Only at the end of the day did they rally it, and then they've rallied it further overnight. So buyers are in control right now, and we'll just have to wait and see if they stay firmly in control and really push us up on the open and leave this gap alone and move up into that 93 and 97 area. Currently, right now on the Keltner, we have our Keltner center line right at the 84 level. We're holding it right now. A move up to test the upper Keltner is going to take us up into the 2089.75. By the time we get there, it's likely to be 2090.50. If we don't hold there, move down, test the VWAP is down at 81.75, and a move down to test the lower Keltner is going to take us up into that 78.50, that CHVN, part of the double distribution we've got going on here. Quick look at gold. Gold just barely, my swing long on gold is barely holding on, and hopefully it can continue to hold, but it is looking weak. Value is getting very tight right now, 86.60 to 92.20, and with balance right in this 88 level. If we can hold this and not break below the 86 level, look for them to come up into the 95.30 level. If they can get above that 92, possibly even come up and test the 1100. But way gold is trading right now, it's not finding any strong buying stepping in. Likely to come down, break this 84 level, and come down and test the 74.70. I've been tempted to take the profit, but then I've got to see if I can find another entry. I've already got my my swing long funded, so I'm just going to let my my stop work, and if it takes me out, it takes me out. No harm, no foul. But that's the trade plan on that trade, and I'm going to stick to it. So that's it. As always, trade well, trade safe, and we'll catch you on the flip side.